Fresh talk to him.
This is Spec Weekly. I'm Cutcraft, delivering your dose of iota hopium. Join me as we take a look at what happened last week.
Read the disclaimer, baby.
Let's go. Try to match the currency to the graph. Now, when you look at these graphs, you can't help but realize how strikingly similar they all are. And to put it simply, it's because altcoin performance is tied to Bitcoin. Sure, we see the occasional breakout, but after an altcoin jumps, its price eventually stabilizes to follow what Bitcoin is doing. So why is this important to think about? Because we need to consider that currently, the performance of an altcoin isn't determined by how the project is advancing on a technical level. Rather, it's following what Bitcoin is doing for the most part. This means that, for the time being, we're tied to the fate of Bitcoin.
Once upon a time, there was a Chinese farmer who lost a horse, ran away. And all the neighbors came around that evening and said, "That's too bad." And he said, "Maybe." The next day, the horse came back and brought 7 wild horses with it. And all the neighbors came around and said, "Why, that's great, isn't it?" And he said, "Maybe." The next day, his son was attempting to tame one of these horses and was riding it and was thrown and broke his leg. And all the neighbors came round in the evening and said, "Well, that's too bad, isn't it?" And the farmer said, "Maybe." And the next day, the conscription officers came around looking for people for the army, and they rejected his son because he had a broken leg. And all the neighbors came round that evening and said, "Isn't that wonderful?" And he said, "Maybe." The whole process of nature is an integrated process of immense complexity, and it is really impossible to tell whether anything that happens in it is good or bad, because you never know what will be the consequences of a misfortune, or you never know what will be the consequences of good fortune.
It's hard to completely describe what BlackRock is or does. But if I was to make an analogy, I'd characterize BlackRock as something resembling a giant octopus, devouring all the resources it comes into contact with to establish complete domination over its world. BlackRock manages about $8 trillion in assets, spread across multinational companies from all industries. And BlackRock, the sneaky buggers, often invest in competing companies. Just imagine for a second controlling a substantial stake in Fox, while at the same time managing a considerable equity in CNN. Well, they do.
The sharing of biased and
False news has become all too common on social media.
More alarming, some media outlets publish things that simply aren't true without checking facts first.
Unfortunately, some members of the media use their platforms to push their own personal bias and agenda to control exactly what people think, and this is extremely dangerous to our democracy.
The official line for BlackRock is that it's an American multinational investment company. An investment company. It's like saying Apple is a smartphone company. Larry Fink is the chairman and CEO of BlackRock, and he was a key player in the 2008 global financial crisis, when the US government decided to bail out key banks by providing them with liquidity so they could continue to lend, as mortgage owners were defaulting and could no longer afford to pay their installments. Stabilizing the US economy is a huge responsibility, and you'd expect a thorough process to select an administrator to fairly balance and distribute the government-issued cash. You'd expect many candidates to come forward where the government would carefully consider existing relationships and select a partner that does not risk a conflict of interest. However, BlackRock was awarded key contracts with no competitive bidding in a process enveloped in secrecy. Larry Fink, in particular, was a key influencer to determine how much and who received a bailout, resulting in JP Morgan, AIG, and Citigroup receiving billions worth of strategic financing. And that's interesting, because BlackRock holds a significant stake in JP Morgan, AIG, and Citigroup. BlackRock is not just an investment company. They have considerable political power, as since 2004, the firm has hired over 84 former government officials, regulators, and central bankers. This revolving door with government has granted BlackRock access to the backrooms of power, where their influence has proven strong enough to dictate where government funding goes in times of crisis. The power that BlackRock wields isn't in how much revenue the company generates for itself. Rather, BlackRock's power is in determining where money goes, as the company has built its portfolio to around $8 trillion in assets by determining where and how to deploy investor capital. This leads to BlackRock purchasing significant positions in the world's biggest organizations without even using their own money, as the owner of the shares are the investors who buy into BlackRock's ETFs. An ETF is an electronically traded fund. It's often a diversified investment that reduces investor risk, where instead of buying into a single company, stakeholders buy into a fund that purchases a variety of commodities, securities, and stocks. BlackRock's ETFs are what have generated the $8 trillion in assets that they manage, where BlackRock's position in companies is now large enough that their voting power holds massive weight. This is because they vote on behalf of their stakeholders who own the shares. And additional to the voting weight they get through share ownership, if they were to pull out of an investment, their substantial holdings means they would cause a stock to nosedive.
Well, behaviors are going to have to change, and this is one thing we're asking companies. You have to force behaviors, and at BlackRock we are forcing behaviors, and we're going to have to force change.
And coming back to their power, BlackRock issues companies an ESG rating. ESG is the initialism for environmental, social, and corporate governance. We're talking things like equity initiatives, pushing for carbon neutrality, and diversity. So again, BlackRock issues companies with an ESG rating, and this rating now determines how investable the company is. And as we've just seen, BlackRock is no longer suggesting ESG outcomes, they're forcing them, pretty much holding companies to a ransom. But this is a story for another time.
And you're saying now that you don't believe that companies have a unique interest in this? They're not saying, hey, Larry, we're thinking about how we can get exposure for our balance sheet. Do you have a product? Can you do something? Are you thinking about creating a product for them? And you're speak directly to that, because, by the way, that is the narrative. It's the narrative around, frankly, even the valuations of the Coinbases of the world, in part because there's a view that institutional money is desperate to be part of this, and you're saying the opposite.
Well, we are not having those conversations, and maybe they're talking to somebody else. So I don't want to suggest that we have perfect information, but our broad-based client relationships we've had very little interconnectivity on the conversation on crypto other than a fascination.
Historically, Larry Fink has been called on crypto and waving away the potential for a Bitcoin ETF product. But BlackRock aren't the only entity who use ETFs as an investment vehicle. And over the years, we've seen some heavy hitters in the world of finance filing for a Bitcoin ETF. Probably the earliest filing for a Bitcoin ETF was by the Winklevoss twins, who have now filed twice for a Bitcoin ETF. We've also seen Cathie Woods make an ETF proposal with her company ARK. And on top of that, a power player like Fidelity came to the table with their pitch for a Bitcoin ETF. Fidelity being one of the world's largest and most diversified financial service providers. Now, what all these ETF proposals have in common is that the SEC must approve them. And the other thing that these ETF proposals have in common is that the SEC has not approved any single one of them. But why would the SEC continue to deny Bitcoin ETF proposals?
John, in conversation with Central Bank Governor Mark Carney at the Council of Foreign Relations this morning, Larry Fink acknowledging that Bitcoin has caught the attention and the imagination of many people. It's still untested, pretty small relative to other markets, and he says it is seeing big giant moves every day, but it's a thin market. Can it evolve into something real, a global market? Fink said possibly. He also noted that having a digital currency has a real impact on the US dollar, making it less relevant, not for Americans, but international holders of dollar-based assets. He did also raise the question that I think many economists and executives are wrestling with. Does it change the need for the dollar as a reserve currency? In other words, John, are there other ways to efficiently transact overseas as well as here in the U.S.? Fink really joining a prominent number of high-profile voices, Melissa, in the past couple of weeks that are saying, yes, this move that we're seeing in Bitcoin and digital currencies in general, it is generating active discussion, and it's something that they're watching very closely.
My theory is that entities who rely on the strength of the US dollar are lobbying the SEC to stall crypto regulatory frameworks, as providing some effective regulation would ultimately lead to widespread investment. And if I'm going to make a connection, I think that's part of why we've seen the SEC's recent actions against Coinbase and Binance. However, something interesting is happening now.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Larry's perspective on Bitcoin has shifted, and therefore BlackRock's perspective on Bitcoin has shifted too. BlackRock filed for a Bitcoin ETF on Thursday, June the 15th. And if we're to follow the narrative that BlackRock holds a lot of political power and apply that to the SEC's decision-making on the topic of ETF approvals, then there's a good chance that we'll see the very first Bitcoin ETF get approved, especially considering how much fire Gary Gensler is coming under right now. Now, the reason why a Bitcoin ETF could be important for crypto is that it has the potential to create an on-ramp for more institutional investment, where fund managers can get access to a regulated Bitcoin ETF for clients who want that crypto exposure without the complications of directly owning the crypto asset. They are buying a unit within a fund, where the fund itself purchases, manages, and owns the cryptocurrency. You can imagine how attractive this kind of fund would be in the middle of a bull run, where the price of Bitcoin is going bananas. So, if the BlackRock Bitcoin ETF gets approved, it would be a clear signal that legitimizes cryptocurrency to the mainstream normies. They say a rising tide lifts all boats. Now, would a Bitcoin ETF benefit us who are holding IOTA? Maybe. Would it be bad for crypto if a giant octopus like BlackRock started to get involved? Maybe. I've been wondering lately, what's going to trigger the next bull run? Like the actual jumps in price, where the price just climbs strongly day after day. Remember those times, guys? I miss it so much. But I do feel like we're slowly creeping towards those times again. And it got me to thinking, that entities like BlackRock with access to massive amounts of capital could be what triggers that bull run. And I struggled with that idea. I struggled with the idea of a bull market being triggered by something like a BlackRock ETF. It just feels like a company that forces their investments to behave in ways that align with their philosophies. That can't be good for the autonomous and decentralized philosophies of crypto, where a single party looks to strangle and control what they're invested in. And if I think too long about it, it will get me feeling down. And look, if you ever find yourself feeling down, all you have to do is remember $4 EOY. See you next time.